Welcome to the International Accounting Channel. Remember to subscribe to the channel, like, share your opinion. Together with us to answer multiple choice questions about international accounting. Now, let's get started. On January 2, N. HTD Company borrowed $100,000 from the bank for 5 years to buy a car. The bank interest rate is 12% per year. The principal is paid in one lump sum on the maturity date. Determine the amount of interest the bank pays periodically each month. A. $1,100. B. $1,000. C. $900. D. $800. $1,000. On January 24, N. The actual amount collected from sales at the counter is $6.50 less than the actual amount sold on the cash register. The accountant records a debit cash surplus. Shortfall $6.50 per credit cash miscellaneous expenses $6.50. B. Debit cash miscellaneous expenses $6.50 per credit cash surplus, shortfall $6.50. C. Debit cash surplus, shortfall $6.50 per credit bank deposits $6.50. D. Debit bank deposits $6.50 per credit cash surplus, shortfall $6.50. C. Debit cash surplus, shortfall $6.50 per credit bank deposits $6.50. Suppose, on February 1, N. Accountant MIT sets up a petty cash fund, $150. Accountant records a debit bank deposit account $150 per credit petty cash account $150. B. Debit petty cash account $150 per credit bank deposit account $150. C. Debit petty expenses account $150 per credit bank deposit account $150. D. Debit petty expenses account $150 per credit petty cash account $150. D. Debit petty cash account $150 per credit bank deposit account $150. On January 15, N. The actual amount collected from sales at the counter is $4 less than the actual amount sold on the cash register. The accountant records a debit cash surplus. Short $4 per credit cash miscellaneous expenses $4. B. Debit cash miscellaneous expenses 4, credit cash surplus, short $4. C. Debit cash surplus, short $4 per credit bank deposits $4. D. Debit bank deposits $4 per credit cash surplus, short $4. C. Debit cash surplus, short $4 per credit bank deposits $4. There is an economic transaction that occurred at HTC Company. The enterprise paid the seller by transferring $1,500. The accountant reflected as follows: debit account bank deposit $1,500 per credit account payable to seller $1,500. The correcting entry will be a debit account payable to seller $1,500 per credit account bank deposit $1,500. B. Debit cash account $1,500 per credit deposit account $1,500. C. Debit deposit account $1,500 per credit account payable to seller $1,500. D. Debit account payable to seller $1,500 per credit cash account $1,500. Debit account payable to seller $1,500 per credit account bank deposit $1,500. There is an economic transaction. Enterprise pays debt to seller in cash $1,000. The accountant reflects as follows. Debit cash account $1,000 per credit payables account $1,000. The correcting entry will be a debit payables account $1,000 per credit bank deposit account $1,000. B. Debit cash account $1,000 per credit deposit account $1,000. C. Debit deposit account $1,000 per credit payables account $1,000. D. Debit payables account $1,000 per credit cash account $1,000. D. Debit payables account $1,000 per credit cash account $1,000. On June 1, 2016, HTD Company borrowed $30,000 from the bank, committed to repay the debt within 60 days, interest rate 12% per year. The bank discounted immediately at the time of borrowing. How much is the discounted amount? A. $3,000. B. $600. C. $3,500. D. $1,000. D. $600. On January 8, the company purchased auto insurance for the entire year for $6,000. Assume that the accounting and reporting periods are quarterly. At the end of each quarter, the accountant will make the adjusting entry. A debit cash $1,500 per credit accounts payable $1,500. B. Debit prepaid insurance $1,500 per credit cash $1,500. C. Debit insurance expenses $1,500 per credit prepaid insurance $1,500. D. Debit accounts payable $1,500 per credit cash $1,500. C. Debit insurance expenses $1,500 per credit prepaid insurance $1,500. At the beginning of the fiscal year, the company paid $24,000 in office rent for the entire year. According to the matching principle, this rent would be A. Charged as an expense for the month it was incurred. B. Charged as an expense for each reporting period. C. Not recognized as an expense. D. Recognized as revenue. E. Charged as an expense for each reporting period. Expenses incurred during major repairs of fixed assets will be recorded as A. Debit repair costs account. B. Debit accumulated depreciation account. C. Debit fixed assets account. D. Debit basic construction account. E. Debit accumulated depreciation account. Thank you for watching our channel. See you again in the next video.